I tell clients you buy life insurance for people you owe or people you love, sometimes both. So if we have big debt carry, we want to make sure that if we pass away, something happens to us, our family's not stuck with that. Make sure your family still has the same lifestyle. So really what I do is I'll sit down and I'll run a dime package, right? Football. So we talk about debt, income replacement, mortgage, and education for the kids. What I've kind of figured out that as a man, you want to make sure your family's taken care of. And if I take care of those 4 big categories, you sleep well at night.
Welcome to episode 4 of Mortgages and More, hosted by me, Bryan. Today I've got a really good friend of mine and insurance guru extraordinaire, Dustin Paine, with his Paine Insurance Group. And we're going to talk about anything and everything that has to do with insurance, and a lot of it's going to tie in with mortgages. But then we're also going to talk about other things, auto, recreational vehicles, umbrella policies, and also even life insurance. We're going to get into that a little bit. So thanks for coming, Dustin. Appreciate you being here.
Absolutely, man. Thanks for having me. I don't know about insurance guru. I think we've just made enough mistakes that we can hopefully help people navigate the crazy market we're in right now.
And that's what I say. The experience just means you've screwed up enough.
That's it.
To know what not to do again.
That's it. Failing is first attempt in learning, right?
Exactly.
So that's good.
Awesome. So tell us about your family before we get into business.
We are a family of 7, where me and my wife got married in she's going to kick me if she watches this. So 2021, I think. So we're blended. We've got a 13, 15, 17, 18, and 19-year-old.
Wow.
Oldest is up at University of Arkansas studying finance and accounting, and I told her phenomenal. If I never have to write another check ever, I can come back and help with the business, right?
Yep.
And then my oldest son he just joined the agency.
Oh, very cool.
Yep. So he joined back in midsummer.
Was he going to do a little bit of ranching?
He's doing some ranching too. So we've got a cattle operation, and then insurance, and he's lights out. He's as my buddies say, he can't help but be good. He's got your blood in him, right? And I'm like, well, hopefully he doesn't make the mistakes I made, right? Yeah. But he's crushing it in sales, doing his thing, and then we run the cattle operation on the side. And then Lex is a junior, and Maddie is a freshman, and Gavin is a 13-year-old.
Busy
time.
Yes, sir.
You bet.
Very
busy
cool.
Time.
Awesome. So your office is in McKinney, right?
McKinney,
off of
yes,
El Dorado
sir.
Parkway?
Mm-hmm. El Dorado and Hardin.
So just west of 75 a little bit.
About
okay.
Two or three lights, I think it is.
Okay.
Yeah.
Very cool. So how did you get into insurance?
Oh, man. So 2010, I was working in the oil and gas business, and my baseball coach in high school, actually, tried to recruit me multiple times to come in and sell insurance. He became an agent when I graduated high school, and he wanted me to come sell for him. And I kept telling him I want absolutely nothing to do with the insurance business at all. And I realized I just didn't love the lifestyle that the oil and gas brought. Mm-hmm. And so I reached out to him just to say, man, what does this look like even? I don't want to be in an office all the time. That's not my MO. And he's like, good. If you're in the office, you're not going to make any money. So you need to go out and grow and market and build relationships, right? Like you and I did.
Absolutely.
And so we sat down and talked, and the rest is history.
Yeah. Well, very cool. So when did you go out on your own?
From the get-go.
Really? Awesome.
From the get-go, yeah. So we did.
So you really have run into some walls and
100%.
learned how to navigate.
Yeah. So I tell the story. I've got a group of agents now that I mentor. They're younger agents, and I really love the coaching aspect of business in general. And I tell them, they look at our business now, and we've been massively blessed. They look at our business now, and they're dealing with the ups and downs of starting. And I said, guys, there were plenty of times where I would call lender partners like yourself, and I would reschedule and tell you that I had I had double booked. But the reality was I didn't have gas to put in the car to come to you, right? Yeah. I had enough gas to get to the gas station, and my bank accounts were negative, right? And I had to make it to the end of the month until we got paid again. So I think my first paycheck from an insurance company for the month was $900. And my wife looked at me. She's like, "What are we doing?" I was like, "Well, I just put the house on the market, and we're gonna get going, right?" Yeah. So it lots of ups and downs, but a lot of learning.
Yeah.
So
that's what we do. I mean, I started off in corporate mortgage business, actually in the collection side and servicing, and then jumped out to be a mortgage broker with 3 other guys that I worked with, and literally had never taken a loan out before. But I figured my 3 friends, they actually had worked with me, and they said, "Oh, dude, if we can do this, we'll teach you. You'll pick it up real quick."
Yep.
I didn't get paid for 92 days.
Mm-hmm.
92 days.
Mm-hmm.
Somehow I had convinced my wife to let me jump out. We had 4 small credit cards that had no balances on them, and basically pay the utilities and gas and, expenses for, we started off sending mailers way back in the early days, back in the late 90s, 1997 is
Believe it
where
or
I
not,
jumped in.
those are coming back around.
Yeah.
We're
Oh,
seeing them on the insurance side. Mailers are crushing it. Anyway,
really?
sorry, go ahead.
No,
Yeah,
you're
we talk
good.
about
But so that's how we had done it. So by the time I got my first client to say yes, I was like, okay, now what?
Yeah.
So um, the first file that I sent into underwriting, the next day, our account executive was in my office, and she says, "I'm going to show you how to build a mortgage loan file."
Ah,
Dude, I didn't even know what a verification of employment was until she
uh-huh.
gave me that list and showed me how to stack the file. And I stuck with that system. I was a broker for 7.5 years. Then I jumped into the mortgage banking world,
Yep.
um, just because it was hard to get loans closed on time. And I was transitioning more from a refinance pay-per-click.com loan officer to working with realtors and builders. And if you don't close on time, you don't keep realtors and builders. So
Mm-mm.
I had to learn all that on the fly, kind of like what you're
Sure.
talking about. So, and but valuable experience. And I tell you, my time in the servicing part with foreclosure and collections, I believe it made me a better loan
Of
officer
course.
because now I know how to grade credit. I know how to look at credit where I can just help a client tweak, this or that, and get them a better interest rate, or better, maybe getting them an approval where I couldn't had it where they weren't approved before. So, and I'll even tell you, that creative mindset that, doing a lot of the outside the box loans, we saved a deal just this month that had been turned down by 2 other lenders, and the listing agent was my client, and he's like, "Man, this gal's putting down a lot of money. Her agent says she's got good credit. Before we let this thing die, let's just let Bryan take a look at it." Well, the client trusted us. We had a phone call, and after talking to it, she said that she really wanted the house, and she was willing to go through the effort of letting me try, because from talking to her, I heard things that made sense to me, and
Mm-hmm.
my experience is what allows us to do that. And I'm going, I think I know what the problem is,
Mm-hmm.
and I think I know that I need to go verify one thing before we even get a loan application from you. And sure enough, I got the proof of that information, got it, ran up the chain in underwriting. I got that piece blessed before
Before you
we
even
ever got it.
started. Yep.
And we just changed loan programs. They were trying to shoehorn this client into a specific loan program that wouldn't allow for this one piece to be calculated the way that I was working on it. And just by changing the program, it loosened up the guidelines on how
Mm-hmm.
that income could be looked at. So that's the kind of stuff that you and I learned from having been there, done that, and seen a couple of what do you call it at the county fair, pig gradings or whatever you
Mm-hmm.
call them. So we're
Mm-hmm.
handing out ribbons. So
We see a lot of deals with hair on it, right? And
yeah,
I joke around and I say anybody can do an easy deal, right? It takes somebody with experience and knowledge to be able to do deals that are hairy.
yeah,
And we get that. I mean, right now more than ever, with all the carrier influxes and changes and disruptions that are going on right now because of insurance rates, right? You got to be creative sometimes, right? You got to go, hey, where are we at? How are we putting this? Knowing what loan programs, or in our case, which carriers are in which markets,
yep.
right? And it saves a ton of time.
It's ironic that you brought up all those changes, because my next question is, there have been myriad changes to the insurance business, even from just 23 to 24.
Mm-hmm.
Can you talk to us about, whether it's cost changes, whether it's that, you said carriers moving in and out, the types of coverages that they're allowing versus what they didn't. What are the changes?
Yeah, everything from 23 to 24, everything. I've got some buddies that have been in business for 30 something years. And the beginning of this year, I called them. I'm like, man, have you ever seen a market like this? And they said, absolutely not. In 30 years, I've never seen an insurance market quite like this. And what they mean by that is most carriers. So if you look at it from a business standpoint, when one carrier pulls back, the other carriers take market share, and it's kind of an ebb and flow. Insurance, I tell everybody, insurance is cyclical. If farmers wants carrier or wants clients right now and they're in growth mode, then they're going to price accordingly, right? If you want to buy a certain segment of the market, you price accordingly. And then when they pull back, Allstate will lean in, and if when their Allstate pulls back, State Farm will lean in, and it's just kind of we're just sharing clients back and forth, really.
Okay.
So what happened in 24? Not all the carriers, but the majority of the carriers in the North Texas area have taken losses in the past 10 years, straight across the board, like just not profitable at all. And so the reinsurance carriers compressed that market big time, right? So reinsurance is insurance for insurance companies.
Okay.
And they said, you guys haven't been profitable for 10 years, 15 years. if you don't make big changes, we're going to lower your financial rates.
So the reinsurance companies are helping drive the changes that insurance companies are making.
100%.
Okay.
100%. So what their goal is to go is to be profitable again, right?
Mm-hmm.
Which makes sense from a business standpoint. You can't have a business for 15 years and pay out $1.10 and only make $1, right? That doesn't work.
Right.
And so what they've done is they've compressed that. Carriers had to make big changes, like pull out of the markets, right? A lot of the small carriers aren't in the markets again, right? Like you see those hippos and the some of the smaller ones that just aren't here anymore. So they pulled in, or they put a moratorium where it's just pause insurance in the 5 counties. So we jokingly call the 5 counties in North Texas the counties of doom. It's actually less profitable than Houston, believe it or not.
Well,
and I always used to think Houston was terrible. Yeah. Yeah, but we're sustained losses year over year over year over year.
Mm-hmm.
And I have clients I talk to, and they're like, "Oh, we have global change and climate change, and there's more hail." And I don't really subscribe to that. I think we have the same amount of hail, but because of the growth that we've taken, where hail used to fall on cornfields, now it falls on communities.
Right.
And so instead of the insurance company paying out $100,000 to that farmer to replace the corn, or $500,000 to the farmer to replace the corn, they're paying out $1 million or $2 million for that community now, right? So anyway, kind of make a long story short, the big changes are binding restrictions on you can't go over $625K on replacement cost, or 2% deductibles, 3% deductibles, declining different coverages inside of the policy, right? Such as water damage, replacement cost, and that sort of thing.
Mm-hmm.
I think we're at the end of that. I think a lot of carriers made a lot of changes in 24, and we're starting to see some of the carriers move back into the market, start writing again, loosening guidelines. I think that's where we kind of start really seeing, okay, people are starting to grow again. People being insurance companies are wanting to grow again. They start loosening guidelines and making it easier.
Okay. So let me take a divert a little bit off of one of the things you said. Would it be reasonable to say that Grayson County insurance is going to be maybe a lot less costly than Collin County, even though it sits right on top of it, but it doesn't have the density of a population?
Mm-hmm.
Okay, that's good to know.
Yeah. So a lot of times your rural communities don't have near as stringent guidelines. For example, in Grayson County, I still have a lot of carriers that'll write a home only.
Okay.
You move down into Collin, you cross the line, and you go down into Collin. Most of your carriers require home and autos bundled together. And so that's a strategy that some carriers put in there.
Okay.
So it's now those rural markets have their own challenges. I think I heard from Insurance Journal or whatever that one of our big rural carriers dropped rating from an A+ carrier to a B+ carrier, which means they have to take massive rate. And a lot of that is because they were rating for rural exposure. And now with all the growth, they're picking up bigger
More
exposures. More residential stuff. And it causes their analytical financials to be off, right?
Okay.
So,
but. Oh, okay. Well, that's cool.
Your ancillary places are typically a lot cheaper. Like if I quote a house down in the hill country, let's say, it's probably 40% as expensive as a house in Collin County to insure.
Wow.
Yeah.
Well, I reached out to you earlier this year whenever my insurance renewed, and my insurance went up by 40%, literally 40% year over year. And I need a new roof. I don't need one yet, although there's enough wear and tear on it, probably would qualify. But let's say if my insurance is, let's say, $5,000 and I get a new roof, how much does that play into it in today's world?
Not much anymore.
Not much anymore.
No,
okay.
Used to, that was a 40-50% discount.
I thought it would be, yeah.
And that was really up until the end of 23, we saw that, right? If you get a new roof, you get a massive discount for the first 5 to 7 years, kind of the life of the roof in North Texas, right?
Right.
And we're not seeing the same anymore. And I think part of the reason is because they deepen those discounts so much that's part of the reason they're not profitable.
Okay.
You get the Wiley storms. You remember back in 17, we had that Wiley storm.
Yeah.
And I actually went out there to meet some clients and look at their house and help.
Had hail going through the roof, through the ceiling. Yeah.
Yeah. I was standing on the roof looking down, and there looked like a mortar round went through the top. It was wild. And those roofs were brand new, right? So
oh wow.
That's kind of why it got hit that way. But anyway, it's not near as big of a discount as it used to be.
Okay. That's good to know, and something for me to keep in mind. That's education that I didn't have because, one of these days I am going to get a new roof, and I would have been expecting a significant decrease, which may not become.
And it might come back around, right?
Yeah.
Like there's We've gotten word from some of the insurance companies that they're putting discounts back on that they had pulled off. They're doing mid rate changes, which just means like in the middle of not middle of their policy term, but in the spring, carriers file with TDI what rate they're taking, right? So it's kind of a midterm for what they file for, and so they're kind of changing discounts midterm because they're getting profitable again. They want to start getting business again.
Okay. So talking about carriers coming in and out, this may not be super recent, but you're a farmer's agent, right? Do you have a separate agency that is a brokerage side, or do you just have a piece of your agency that is allowed to be able to be a broker?
Yeah, no. So farmers, inside of farmers group of companies, if you will, there's a bunch of different carriers inside of there.
Okay.
And so we take out and do Foremost and Wellington and Homeowners America and some other carriers that have less stringent guidelines.
Yeah.
And so farmers was really smart in going and building partnerships with other companies, if you will, right?
Okay.
And I heard that that there's more on the horizon of more carriers coming in. And so it's really I won't say you could sell based upon the client. You can put them in whichever policy you need.
Okay.
Right.
So just you're able to meet the best of all worlds.
Correct.
Okay. So
Correct. Used to be it was kind of a one size fits all with all carriers,
right?
Or with farmers specifically, right? If you didn't have $40,000 worth of art, didn't matter. It's still in the policy, right?
Yeah.
And now they've changed that up to where even within farmers itself, you can do 3 or 4 different. There's 3 policy types inside farmers, and you can cater and adjust based upon the client needs. So it's really neat to be able to move in and out of it.
Excuse me, 1 second. My nose is running. So
You're good.
We'll have to have her edit that out. All right, and we're back.
We're back.
Okay. So when a client calls and they talk to you or Alexis, or let's say even your son in the office, what's the typical questionnaire that you guys go through? What's that look like?
So we've done a bunch of different ways to kind of approach it, right? But to keep it simple, I just tell people, hey, you typically change for 4 reasons, right? I call it the 4 C's of insurance, right? Cost, coverage, claims, or communication. So you either are looking for better cost, you're looking for better coverage, you had a claims issue that you don't like, or something was denied, or you don't have anybody to call, right? Nobody wants to talk to a 1-800 number when your house is on fire.
Right, exactly.
So that's kind of my main, that's my initial, hey, Bryan sent you over. Congratulations on the new house. What do these 4 things really matter to you?
Yeah.
Most of the time people say cost, right?
Yep.
But in reality, with more of your questions that you ask, you understand it's not really about cost, it's about value.
Yeah.
So then we go through and figure out what your needs are, figure out, hey, do we want to work together, right? Do we even like each other, right? If we don't like each other, we're not going to work together.
This is the same vision we have when we're talking about rate with clients.
100%.
I mean, because, I would say no one is always the lowest rate.
Correct.
Right. But that relationship, the trust that you build, seeing their needs, meeting their needs, that can change the whole world, like where rate almost becomes irrelevant. You know?
You bet. We like to talk about total cost of insurance. And a lot of people think if I ask you, well, hey, what's total cost of insurance? You're going to think I pay $8,000 a year, right? Well, that's premium.
Yeah.
Right. Well, then you have to add on your deductible if you have a claim. And then what a lot of people don't realize is you have to add on the exclusions that the carrier doesn't cover. So I make it simple and I go, would you buy an auto policy if a wreck was excluded? And the answer is no. Like, why would I buy auto insurance if it's not going to cover a wreck?
Right.
So I take that over and I go, well, hey, this policy that we're quoting against or this particular carrier doesn't cover water damage, right? Well, water damage is the number 2
You and I have had that conversation for a client.
in Texas, right? Or in North Texas, rather. So let's make sure that those exclusions are covered, or at least you're aware of it, right? We want you to be aware of what's there and what surprises you might have.
Right.
So
I appreciate that. I call my process is I have before we ever get a loan application, I have a client interview. I want to find out their needs. What's their vision? What's their current life look like? What do they want it to look like whenever this next transaction is completed? That kind of a deal. So that's what you're just finding out what they need, explaining the total cost of insurance. So one thing I talk about is the total cash to close. I don't just talk about down payment. I make sure the clients know everything, the total cash to close. So we're talking the same language, 2 different businesses.
I like it.
Yeah.
I like it. Well, and I think that goes well when we're working on clients together, right? You're talking about total cash to close. I'm talking about total cost of insurance. We want to make sure all those merge up. So.
when you have, let's say you're a homeowner and it comes to filing a claim, what are some of the most important topics that you believe need to either be brought to, is it the adjuster or to your agent directly? I mean, what types of things do homeowners need to make a claim? Do they leave out often, and it would help if they didn't, if they were included?
I think the biggest thing is don't hesitate to call your agent, right? Whoever that is. I always recommend clients call us first, and let's go through it and make sure that we have a good GC, we have a good roofer, a good person to come out and look at it, and then let's get on the phone with claims quickly, right? Like
Mhm.
I see a lot of times somebody will see a a leak in the roof and they won't think it's that big of a deal, and they're like, oh well, I'll call later, and then 2 days later the roof's
The
caving in.
tip of the iceberg.
Tip of the iceberg,
Mhm.
right? Usually, if you see a problem, there's a problem behind it.
Mhm.
Which is really in anything, right? Life in general. If there's half of a problem, there's usually a bigger problem behind it. So, the biggest thing that I recommend is call your agent immediately.
Mhm.
I don't like calling the carrier right off the bat, and I don't know if that's the right thing to do or not. But I don't want somebody to make a claim if it's going to be smaller than the deductible. There's no point in having that oops on your record.
Totally agree.
So I always recommend, hey, give me a call. Let's walk through it. Let's see if it's going to be over the deductible. If it is, let's go ahead and file a claim. And if it's not, then let's not. Right?
Mhm. Um, I've got a very good roofing friend of mine. We've known him, I mean, literally family friends, schools back in the days, you know. Um, uh, he actually has started having a consultant come out and review the roof, and basically for a comprehensive review. And he's a consultant with insurance companies, but he's also come alongside roofers to help them make sure that they're getting everything covered that needs to be covered, and then are able to enunciate and explain to the adjusters or insurance carriers, why these items are needed.
Mm-hmm.
And his name's Neil Craig, and
Okay.
he said that it has proven invaluable for his clients to have this gentleman involved. Have you worked with any consultants on things like
I
that before?
haven't, but I don't disagree with it. I
Yeah.
mean, that's that. Anytime you can provide more education, I think that's good.
Okay.
But you get these guys that know the contracts in and out, and they know the verbiage in and out of how all the policies work, and so I think any knowledge is a good thing for sure.
Types of policies that the types of insurance that come through your group. What are some very unique things that you've been involved in for getting insured?
Hmm. We have some houseboats.
Huh.
We have, and we're doing a lot of farm and ranch insurance now, right? With our cattle operation, my
Mhm.
son's out uh, meeting a lot of people that have land and horses and cattle, and so that's a whole thing that we're learning now. And so we're doing quite a bit of that. I'm trying to think of some unique stuff that
Do you
we're
have any
doing.
like personal items that you've had to insure or have a rider on your their homeowners insurance
Hmm.
for? So I mean,
Nothing really out of the ordinary. Texas, we have jewelry and guns, right?
yeah,
That's the most of it.
yeah,
Most carriers only cover up to $1,000 or $1,500 per gun, right? So
yeah,
you're a hunter, I'm a hunter. You can get that number pretty quick, right?
yeah,
So,
yeah.
um, yeah, really. I mean, I'm sure I think anything like crazy unique. We get questions. There's a lot of guys in the city that are buying land, to build on down the road,
Mhm.
and highly recommend having liability on that land. Right, somebody walks on the land, they get bit, they get hurt, they're riding four-wheelers, whatever. You can extend most of the time. You can extend a liability from the home to the vacant
Oh
land
wow.
as long as there's not a building on it. Right.
Okay,
So if there's a structure on it, then you got to put its own policy.
that's good to
But if
know.
it's vacant, you can extend it.
I actually get asked for helping people with land financing. I would literally say once a month
Really?
minimum. Yeah. So that's another piece of information that I now have that I can help
Yeah.
converse with them about, and help keep them covered.
Yeah. Absolutely.
Very cool. Um, so I want to talk to you about life insurance.
Okay.
So you had mentioned that to me this morning. Talk to me about what you guys offer. What you are look for in the clients. Like how do you go about helping someone with life insurance?
Kind of the same thing we just talked about on a needs analysis.
Okay.
So I tell clients you buy life insurance for people you owe or people you love, right?
Yeah.
And sometimes both. So if we have big debt carry, we want to make sure that if we pass away, something happens. Something happens to us, our family's not stuck with that. Make sure your family still has the same lifestyle. So really, what I do is I'll sit down and I'll run a dime package, right? Football. So we talk about debt. income replacement, mortgage, and education for the kids. Those are the
Dime package.
Yeah, the dime package. So what I kind of figured out that as a man, you want to make sure your family's taken care of, and if I take care of those 4 big categories, you sleep well at night, not worrying about what if I don't make it home tomorrow, right?
Right.
So we run through that, figure out kind of what you need. I never talk about costs because I don't know, right? I don't know if you're healthy, unhealthy, who knows, right?
Right.
And so we talk about kind of what we need. We fill out an application. We see if we can get an approval. And once we get the approval, then we try to structure it however you need it, right? You can do a term policy that's kind of like car insurance. If you don't die, the money goes away.
Right.
It's a temporary solution while you're in your earning year. It's 10, 20, or 30-year policy. And then, or you can do a permanent policy, right? And a permanent policy would be now to the age 110. If you make it 110, you get a check.
Right.
But a lot of that has cash value and investment potential inside of it. And there's a lot of people now that are using that as another investment tool.
I've heard about that.
Yeah,
and I was going to ask you, is that the type also where the cash investment grows and the returns are good enough that it ends up making the policy payments at some point in time? Okay.
Correct. You can structure it a bunch of different ways. So you can have paid-up additions, right, is what you're talking about, where you pay for 10 years and then I'm 38, right? So I pay for 10 years and at 48, I don't have to pay the premium anymore, and it just keeps going, right? Or 7 pay or 10 pay or whatever, whatever it may be. Or a lot of guys fund it, and then it's called the infinite banking concept. And so you're overfunding that, and then you can draw down on that money, or you'll loan against the policy, so that becomes tax-free.
Okay.
And then you can use that to buy a car, down payment on a house, buy a house, whatever that may be, right?
And then it ends up paying itself back, per se, with the returns.
That's it.
Okay. Wow.
That's it.
That's a little more layered than what I was ready to hear. So,
yeah. So just like you enjoy being creative on the mortgage side, that's I really, really enjoy the life insurance side because you can be creative with it.
Yeah, that's awesome. You and I, we've gotten together a bunch of times, and rarely do we get together and not talk about something outdoors, right?
You bet.
Talk to me about your foundation and what you guys are doing for our veterans, and just tell us a little bit about it. What's the name again?
Creek and Timber Legacy.
Creek and Timber Legacy.
Yeah.
And y'all just had a golf tournament for it, right?
We did. We had a golf tournament last week or the week before that.
Yeah.
Third one or fourth one we've done went well. You kind of realize the cadence right at that point. It's a lot of fun. So everybody comes out, plays golf. But we take out vets and first responders on hunting and fishing trips.
Okay.
Families. So we've just started kind of weaving in some of the spouses into that too. The big reason behind that is to build community amongst the guys, but also facilitate healing and help for families. Right. So you're a dude. I'm a dude. We don't like to talk about our feelings. If I call you and say, "Hey, come over and talk about your stuff," you're going to go, "No, I'm good." But if I tell you come out and chase hogs and shoot a hog in the face, you're going to say, "Okay, I'm in," right?
Yep.
And then we just let God push that forward. And it's been a lot of fun. We started in 19, or we filed in 19, we took our first trip in 2020. And I don't know, 300-400 people at this point. We've got a division out in Colorado, and those guys out there are crushing it. And we got a division up in Pennsylvania. Those guys are crushing it. I think they've got, I think one of them's got 8, the other one's got 10 trips planned this year so far.
Wow.
And then we've got a few that we're running from HQ, if you want to call it that.
Yeah.
But it's been a lot of fun.
Good times. Well, thank you for your efforts put in there.
Appreciate it.
If somebody wanted to participate, how could they get to? How could they participate financially or personally in helping?
creekandtimberlegacy.org. So you can go online, click on it. You can donate there. You can nominate a recipient, right? So if you know of a guy that needs to go out and hunt, or just get connected with the organization, right there, it's nominated recipient, and I think the email still goes to me, right? When you click on more info, I think it goes to me or it goes to my wife.
Okay,
one of the two.
Very cool. So the foundation, and do you have other events besides the golf tournament where there may be able to be attending or? So tell us about that, if you will.
Yeah, so we did, typically in the spring, we'll have a clay shoot.
Oh, okay.
So we'll do a golf tournament, clay shoot. We didn't do a gala this year. I think we'll end up doing it next year.
That's what I thought I had in my head that I remember.
The gala, yeah. So we did a gala. We did the first one up in McKinney. The second one we did down in Plano. We didn't do one this year, but next year I think we're leaning towards Plano again. So there's multiple ways to get involved.
Okay, awesome. Well, Man, I appreciate you making the trip down today, and thank you
Absolutely.
for
Thanks for having me.
dropping insurance knowledge on us. And I know for a fact that there will be somebody or somebodies that will have some light bulbs come on in their head when it comes to talking insurance. So, how can they get to you?
Man, really, my number, or shoot me an email. That's the best way to do it.
And that's Paine
So,
Insurance Group.
Paine Insurance Group.
Is that .com or
.com.
okay?
Yep, PaineInsuranceGroup.com,
And it's
or
PAINE.
that's it.
Okay.
That's it. And I'm sure we can put my phone number on here too.
Absolutely. I can promise you we will. So if you have any questions about insurance, anything, as you've heard the topics we've discussed today, I'll definitely make sure that Dustin's information is in the comments section. So have any questions, hit us up, reach out, and we'll be glad to help.
Awesome.
Thanks for coming, man.
Hey, thanks, buddy.
Yep. Thanks for watching.